Hello guys, welcome to the Trading Parrot. I took a short break for Easter. I went to Spain, spent some time in Malaga, Granada, and Seville. Really had a great time, managed to disconnect with Bitcoin, although in the background I was seeing Bitcoin pumping like crazy. I have to say during these 8 days all I did was close my short at 84k in profit. I sent an article to my Patreon members to make sure that no one gets wrecked with this potential pump that was incoming. And in today's video, I'm going to show you some evidence and what's the likelihood that here we could see at the very least a pullback. Some signals are popping up in my screen. I have had just 1 hour of looking at my charts, and there is some cynic information that I want to share with you guys. Not necessarily the end of the rally, don't get me wrong, I'm not a perma bear or perma bull. This is a data driven channel, so if the data says X, I'm gonna tell you X, no bullshit. Guys, if you like this type of content, make sure that you're subscribed to the channel. Hit the notification bell to get notified every time I put out one of these videos. Can we get 1,000 likes in this video if you really appreciate the comeback? If you can hit that like before we get into the content, that will be really awesome. We still have 3 days for this promotion, trade and deposit to win on Bluffing. The first link in the description allows you to get 10% cashback on this non-KYC exchange. And it's really incredible to see that although price has gone all the way to 94k, retail is still dubious to enter in here. Attention, interest over time on Bitcoin on Google Trends, it's still at the very lows of 20. And guys, I really appreciate all the comments while I was away. Of course, everybody needs a break, and I think now I come with the batteries recharged, feeling much better. I really want to share some of the funny comments that people left while I was away. So, of course, tons of comments. Is Mariano good? It's been 5 days since his post. Where is the parrot? No videos in 5 days. Come on, dude. I hope he's alright. I've been offered prayers. Some people say that the market maker kidnapped me. Some other people say, of course, makes sense that they made him disappear because he's sharing too much about Bitcoin, and that's against the interest of market maker. We need you. People cry. It's really cute. Thanks so much, guys. They must get rid of him exposing too much. Do you need prayer? And so it goes. Hundreds of comments, many of them super funny. And the same on Twitter, so many funny comments. It's really refreshing to come back to work with all the support. Someone says my trading account is down nearly 20% since Mariano left, been getting wrecked trying to find a short entry. Some other people thought that I disappeared because I got wrecked with a short, but if you are on my Patreon, you know I sent an article saying I'm gonna close this in a small profit and continue to focus on my holidays. And the timing was perfect. We closed the deal at 84 point something. Bitcoin did the last drop before shooting 10k up. And I hope you're not doing as bad as this big FOMO trader that is buying high, selling low, and then buying back even higher. Look at this. 6 months ago, he bought 1.8k of Ethereum, spending $6 million. 2 weeks ago, he panic sold at 3.6 million, 56% down. And today, after Ethereum price rose, he bought back at 1.7. That is the definition of someone that doesn't use really data to trade, technical analysis, just trying to chase a ball like a puppy. And speaking of great calls, I've been for months talking about gold potentially topping at 3.5k. We did an analysis using RSI Weekly, and while I was distracting, holding my beer, I was looking at gold because it was putting an all-time high every day, and I was curious where was it going to stop. And I think it pinched 3.5k just by a few dollars before correcting into 3.2. I'm not sure if it's gonna stop there, but if it does, it's gonna be a great call. You can see JP Morgan and Goldman Sachs are calling for higher prices, and that is something that you should probably think that there is a trick there. And coming back from holidays and seeing that on the weekly we are back into the median trying to test this resistance, it's a really interesting position to be, because literally if we flip this line now into support, we're back in the game for the longs. Does that mean I'm going to long the resistance? No way. If we look for entries, now we need to look for a pullback, a retest, or something that gives us better risk to reward. We enter at 74, 76, all those areas to take longs. I'm gonna show you in the rest of the video how all the metrics are getting really heated, screaming, please give me a pullback in here. Starting with Martin here sharing short-term holders just sent almost 50,000 Bitcoin in profit to exchanges in the last 24 hours. That is huge. On the positive side, we get the whales accumulating. Remember, in this area in here, we were seeing Big Whale Explorer. We're going to look into that just in a second. But when this flips into the blue, it means that you're at a faster ratio of accumulation. And the wallets that are actually accumulating are the largest ones. Those tend to be the smart money, whereas all the other cohorts of whales are still currently selling. We're just starting to see the 1K to 10K to join the party of accumulation at the moment. And you're probably thinking, so why are you telling us that there is a pullback incoming? Why does that matter? Because in this channel, we focus not just on long-term plays. Particularly myself, at this stage of the cycle, I'm pretty much focusing on swing trading only, not on holding for long term. We are in a topping year, and yet there is some upside. We can get into 130, 150. That's a pretty decent upside, but we could say that at the very least 2/3 of the upside is already gone, and I have already taken big profits. Opportunities to the upside for me are just swing trades. But of course, if you want to accumulate like these whales and hold it for longer at the cost of an increased risk relative to the risk we have in 2023 and 2022, that's fine. But remember that once we peak in a topping year, you have very little time to react, and usually everybody is going to be telling you to never sell because we're going to 200K, 300K, and that's where you're going to get trapped. I have to admit that during the week of holidays, I still check some of the news, but this article pretty much summarizes everything that continue happening. Back and forward of tariffs, negotiations, and we seem to be entering in a stage where there are some better negotiations going on. All of this is pretty hermetic. We really don't know what's going on, what China is saying. It seems that they are planning to revert the over 100% tariff back to the US, and that is definitely what's helping at the moment the markets to price in some bullishness. But hold on the horses, because Bitcoin at the moment is decoupling from general markets, is taking the lead on pricing in all this bullishness at the cost of excessive open interest, excessive leverage, and all it takes at the moment for a reversal, not necessarily reversal, but for an actual pullback, which could turn into just a retest by now, is anything that can spook the market. Remember, we are facing weekly resistance at the moment, and spots ETFs have had really a great day of inflows. Indeed, the biggest 2-day net inflow in Bitcoin US ETF history. You can see it in here in green. There's also some other bullish news that I'm sure you already heard from another channel, but I need to touch base on this. This company called 20 bought 42,000 Bitcoin. And thanks to that, they got really popular, creating a 160% pump in the valuation of the stocks. It is perceived as a healthy competition now to MicroStrategy, and hopefully new companies are gonna start mimicking this behavior as well. Something that I find quite dodgy at the moment is the behavior of the Federal Reserve balance sheet. You can see that after this double top, it took a big hit. We were roughly at 347 trillion and we went back down to 325. This is still a higher low, but what a move down in here. And the question is, why are they taking this big cut in there? I will say if next week we start seeing something like this, that wouldn't necessarily be really great. And it means that the Fed is taking easy with all these uncertainties as well. And remember that they always know things before the rest of the market. So don't discard that smart money is looking at what the Fed is doing instead of listening to what they say, because that last one tends to be big lies. M2 has continued to push higher, and literally I got sick of opening my Twitter account because 1 every 3 posts are all to do with the M2, and there's nothing wrong with that. It's not a wrong theory, but when everybody's talking about the same thing, it won't play out. And something to note in here, in the past, multiple times, not just a handful of times, but multiple times, M2 pump, Bitcoin collapse, and then M2 collapse too. So we could say that there is a 50-50% of all scenarios in the past that M2 has pumped and Bitcoin hasn't followed up. It has been all part of scenario where both of them are correcting. And in those scenarios, Bitcoin crashes first. So this is not to tell you that M2 is not gonna positively impact the price of Bitcoin this time, but it's just to keep your level-headed as a priority and not to use this as a sole alpha to go all in. Okay, let's go a little bit more short term in here. You can see that we have, number one, a CME gap in here. There's been tons of profit taken on Bitcoin. So we already have two alphas for a decent pullback. What is a decent pullback in here? Well, we could close this CME gap and go into 91.8 from here. We could leave it for later. That is possible as well. I'm gonna bring these levels so you can see where is this located, not just on CME, but also on Binance. You can tell initially it was from 93,380 into 91,820. That's CME premium. On Binance, that is roughly at 91.6. So you can also see that on Binance, the gap seems already fully taken, but on CME it's very clear that there's still a little bit of leftover of the gap. We could say that less than 1K is left, probably $600 of gap leftover. So that's the second alpha for a pullback in here. We got another one incoming in here. This is aggregated open interest. And if you've been watching my channel, you know that the price has done the breakout. That is very clear, but the open interest hasn't. We are right there against double resistance on the open interest. The downward sloping trend line, number one, located at $28 billion of open interest, followed by the flip of support into resistance. So we got that horizontal resistance as well at the same level. So how do we invalidate this? Well, open interest needs to now follow up the price. If open interest doesn't break above 29 billion in the aggregated one on coinalyze.net, you can find this for free, this information. If we cannot flip that, price is also gonna follow up with the rejection coming back down. That doesn't necessarily mean putting a new low. It could be just all part of the retest, and maybe we continue to try to flip that 29 billion into support. Just make sure that we understand that in the past breakout in here, open interest did everything prior to the price, acting as a leading indicator. In this scenario in here, it's been lagging, showing that the interest in Bitcoin is a lot less than what we had in this area. Less interest in Bitcoin, less players is an additional risk. It doesn't necessarily guarantee that we are going to fail to reclaim this level. April is 13.3% up in the green. Top bottom weekly has managed to reclaim the 11 years of support. This is the second time that we do that, and let's see how far we are. This is purely thanks to this big green candle. And that means one thing, that if during this week we saw a rejection from the middle band pushing us back down, that could be really painful. Of course, assuming it's a big rejection. If we just get pushed back down 1K as a small pullback of retest, 2K is still fine. I'm talking about reverting the whole green candle into the mid-80s. Oh, you thought that's not possible now? That's very cute. I'm gonna show you one way that we can get into there. And if you cannot tolerate bearish versus bullish case discussions, data-driven information, you can always grab your phone while I'm talking and scroll through some TikTok, finding some TA that is at your level there. All right, we are on the 4-hour time frame. At the moment, we're going to look into what's going on in here. So we have this very impulsive move straight into the resistance of 94.8. We tracked this as support in the past multiple times. We've been here the last time thanks to the Trump pump in here. He tweeted around the 3rd of March, and that moved the price all the way to the same place we are today. So the task at hand at the moment is that this bull flag needs to break out 95K. And I'm sure you're hearing that from many channels, and it's no joke. This level, 95, is a big level of resistance multi-time frame. And we have this yellow line at the moment being the bullish support. That's the first line of defense. Breaking below that doesn't necessarily confirm that we are going to get a new lower low, breaking 74 or anything, but it's the most healthy level of support that we currently have. And it's located at 92.2K at the moment. That level comes from an RSI of 55. Imagine if the RSI comes in here, that is the most healthy support that we can do for another attempt up. Of course, if we break that, we could go to the middle line at 46. That probably is located around 91.90. On the daily, we have done huge progress. We finally broke out from the falling wedge. That is no news to you. Assuming you didn't go for holidays, you already know. We broke from the yellow resistance, and currently we have this white line supporting the price. Let's assume that we come back for a healthy retest on the daily as well, and there we have 63 RSI holding the price. And I'm gonna take the chance to show you some changes I did this morning to reverse RSI. So first I'm gonna add the 63 in here. I'm gonna disable the other levels. And the thing that I change is I now allow you to hide the fill so the chart remains clean. And also I have this look back, so we just plot how many candles we want. That keeps the chart very clean. And I'm gonna just plot 30 candles back in time. That is sufficient to allow me to see where is the support. So on the daily, that support is around 92.2K. We need now to defend as well the 200 daily moving average, which is located at 89K. Remember how many times in the past month we tried to break 89. We went there to try to liquidate those shorts and we couldn't. That took around a month to take them out. So a retest of 89 on the daily, I wouldn't say that is unhealthy. It could help building some structure, assuming that we hold that level. We clean some of the open interest and then we can move on. That is my wish, it's not my forecast. If we can break that 95 today and carry on, that will be amazing. I just think that it's gonna be really tough to break it. At the moment, the point of control of this whole range on the daily is located at 97. But you can tell if I hover 95 how much support there was in all this area, the Trump pump resistance there. So for me, that 94.7 is really an important level, despite having the point of control at 97, if it makes sense. Remember that we just reclaim the bottom of the range on the volume profile, and the forecast of that is to do a full trip, at the very least to the point of control. But if we continue with this bullishness and we can survive all this excessive open interest that we just increased pretty much from 22 billion into 28 billion, that's 6 billion in just a couple of days of increase. You can tell that every move, even on an uptrend, even on a breakout, open interest is clearing out every step of the way. That's why this particular move in here that is so excessive, it's calling for a little bit of cleaning, building structure before carrying on. MACD continues with the mouth open very wide in here. The bullish cross was on 11th of April. Let's look at the weekly. You can tell that we are definitely managing to challenge the bull market support band, and we are right there on spot with our line of resistance at 93,700. On the weekly time frame, that is the difference between night and day. Hold it as support in here, hold it as support, and we can go into 104 and even break the top of the range, possibly into new all-time highs. But this resistance in here, if it plays out still as a resistance, can be the definition of a dead cat bounce in this area. So watch out with entering late on a long in here, because if this fails from here, it should provide the biggest pain for late longs in this area, as opposed to all the areas that we were longing in here. And yes, I was longing below support, trying to be part of that potential liquidity hunt to the upside, and at the cost of potentially having had to add a new order there. That is the way I do it. Continuing with the weekly, you can see that we have formed a double bottom formation, still against that resistance of around 94. But if we break out there, we get all the power of that double bottom playing out, which if we measure the height is all of this, putting it in the neck, it can get us into 120 easily. That thanks to a weekly breakout. But of course, we need the breakout. A weekly close beyond 94K should confirm that. Stochastic RSI on Sunday closed with the mouth open. On the RSI, we were looking at this double bottom. We say that it was bullish to reclaim the level of 44. I took it easy with my shorts. I still managed to close in profit, but I'm so glad I didn't spend half of my holidays looking at my short and having to think where to add a little bit more and whether I'm gonna get it too heavy as well. And that shows you how risky it is to do a short. So yes, we broke out on the weekly from the dotted line, from the line of support in here. And currently, if this continues to play out, if this doesn't get sold out, remember that this full candle that we see pointing up is an in progress candle, it's not confirmed. Sunday confirms this breakout for the weekly. So far, we are just doing intra-candle moves in this area. But if we close by Sunday like this, that is huge. That can get the RSI back into 73. That's the target. And at the moment, 73, it's roughly 125K, which is not that much beyond the 120.5 that we can see from the double bottom. And look at this. Finally, 2025 is back showing a green candle. It's a flat candle. In my opinion, we should be going higher in 2025 at some point into 120 to 150 and then close the year potentially at these prices, around 90, around 80. Why is that? I'm just looking at the trend. Each and every arrow in here is a topping year. First, we did this massive topping year, then a smaller one. In 2021, as a topping year, you can see that the spread of the year was 158%. We went to 69, but we ended up closing the year just at 46K. And since this is a very flat yearly candle, my speculation is that if we want to continue the trend to still close roughly in the green, we could go as far as 150 if we get lucky, and then still close at 90 or at 80, showing that we are done. And if that's the case, pretty much this is gonna look like this by the end of the year. That's just a finger in the air kind of speculation. You can see that the CPR play out amazingly in April. The previous month we couldn't touch support. This month we touched support by the dollar at 74,400 twice. Twice in a row you got the opportunity to enter at an amazing price. Then we challenged the pivots. We had a big argument in here with the pivots for many days. And then we broke out to finally hit the first resistance at 92.7. At the moment, we are testing that resistance, saying if you can hold the green line at the moment, we might as well go for the next green line, which is 103. Given that this month we have touched resistance, the green line, it is calling for the next month to repeat the same thing. Yes, that cancels out the red because we already did the due diligence, and the latest event now is to touch resistance, which is bullish. Volume continues to increase into the green. Monthly seems to show the same picture as the weekly. A retest of the previous breakout top, just like we did multiple times previously in the cycle, and now trying to break above the monthly resistance, which is around 93K. And here, guys, is the third alpha for a pullback. We are starting to see in here from the SOPR oscillator, which is included in my Patreon shop. The link is in the description. You can get it by accessing all Pine scripts if you want to use TradingView or Telegram charts, which allow you to see all my charts with all my annotations in real time using your own Telegram account. So this one is flagging a sell. This is because too many people took profits in the green in this area of the price, right there against that resistance of 94K. We can see the performance of the past sell signals. Some of them go sideways. This went sideways. This went down. These two went down. We are in a bull market, therefore some of these signals are going to be ignored by the price. In the bear market, when you enter, here you have the best one that went 71% down after that. This one went down 34% down in the bear market. Of course, bull market, much more difficult for them to fully play out. And the last buy signal from the SOPR oscillator is by now almost 14% up after a 9% drawdown. On Ethereum, we are also pinching the area of taking too much profits. This is just for confluence with other signals. I don't trade those signals by themselves. And we got leverage squeeze also giving us some confluence of a selling signal in there. That is because of the excessive longs on Bitfinex relative to the longs. The last time we got a signal in yellow did a 16% drawdown. This one was also great with a 20% drawdown. You can see more signals in focus on the ones in yellow. This one average with that one also had a great performance. So just another data point that you can take in consideration. Open interest at the moment, you can see that most of the times that the open interest goes beyond the blue line, it's an area to sell, to take profits. There are, of course, exceptions. I intentionally left all the area of the breakout from 2024 in 2023, so you can see areas where the open interest went really nuts. 1% of the time that happens during a pump, so we need to watch out for that. We cannot just assume one data point says this is an area to sell and then you put all your money in a short and then suddenly it doesn't work because you're part of that 1% of situations. But this, together with the other data points, is calling for a pullback. Now, manage your risk, because even if we have 10 data points pointing at a short, we still need to manage our risk. That's the way professionals trade. Long and short-term holders, they are accumulating, so that's good news. After going flat for a bit, they found conviction to continue accumulating. That's bullish. And Big Well Explorer, after entering in an area where there was big deposits into exchanges, there was a lot of fear at that point, has come back down into 0.66, which is a mild accumulation in this area. Short-term holder realized price has now gone, it's right there sitting next to the price. Let me zoom in this for you. So this means that at these prices, short-term holders finally are back into profits in average. So more than half of them right now are in profits. And that is one of the main reasons why you're seeing the SOPR spike with distributions from them being finally in profit. That means they've been sitting in the red all these months and they're saying, okay, I might as well take profits in here. That can create a pullback. Now what we need to focus on is this pullback just gonna be a retest, or this is part of a weekly dead cat bounce? Is that 94 gonna produce a lower low, or just go into the mid 80s or low 90s and produce a very healthy needed retest? So yeah, we covered the ETFs and you can see that the Head and Shoulders never broke the neckline. It built perfectly that Head and Shoulder, but at the moment it's kind of invalidating it because it has gone higher than the left shoulder. So it's starting to risk to break the pattern in a bullish way. Fear and Greed Index is at 60. The buy signal from Cerberus was settled on Sunday on this candle at 84,700. It seems to be playing out. Let's look at the past performance. Around May, we have a buy that went all the way to 27 and then still sold down with a lower low. Not forecasting here, but I want you to keep your bear case somewhere before you go all nuts and invest everything in Bitcoin in here. Of course, the final call is always yours, and so it is the responsibility of making the right choice. It's never my decision to make. I take care of my trades, you take care of yours. I tell you what I think. That's kind of the deal we have. So let's look at liquidation levels on the 15 minutes. And I will say that if there was a strong rejection from 95, the area that has the higher risk at the moment is that low 82K. Let's say from 81,600 all the way to 83 is very heavy in liquidity. If I switch on the 10x, you can see that many shorts are entering in this area in here, making it also very possible, if you want to stay on the bear case, that you grab this and then you pitch down. That is the recipe for a decent rejection. How do they do this? They do a liquidity hand, which is just go there, punish these early shorts that are placing their risk there, go slightly higher, kill them all, and then come back below the resistance. And from there, squash them all down. So you squash the shorts and then you squash the longs. Please please keep an eye for that scenario, and whatever strategy you have in mind, consider that, because that could be the biggest pain if it plays out. So how would I play this? Well, you could consider placing, if you really need to, and if you know how to manage it and you have the experience, to enter on a short in this liquidity in here. By doing that, if you have your risk somewhere in here where no one has the risk, if you're wrong, you get stop out in there with low likelihood because there is less liquidity, less chances. But you know you're fully wrong if the longs manage to get the price back above 100K, which makes sense. But placing your risk together with all these people here, let's call them the losers or the potential losers, which have way more chances to getting liquidated than the people that place their risk slightly above 98, assuming the price goes in here and you wait with a limit order to enter at those levels. What is the risk of that? Well, price might not end up playing out in the liquidity hunt setup and might just come back down there. Well, you can have another setup for that. This area, which goes all the way to 92, we already identified as 4-hour and daily support. So if we get that mild retest, that could be an area to enter with a small long. What is the risk? We get a bigger correction and we go all the way to here. So you could DCA these two levels, or you could get stop out with your risk again around an area where there is less risk to getting stop out. Does it make sense? I hope it's clear. After all these days of being away, it's really difficult to get my mind back in the charts. So long-term liquidity pools, bull case. Well, all these shorts that are here up until 125, now going all the way to 136, but declining very fast. After that is the risk of the daily double bottom formation breakout. The weekly one as well can go into 120. We already talk about all the targets. The failure, the full failure of this is still that 68, which of course, if we can manage to get over 120, we invalidate the 67 and we leave it for the bear market, together with the 48, which I think is still doable in the bear market, definitely. CoinGlass liquidation levels, we got this level at 82. We already mentioned that level as high risk in case we fail to break 94 and we do not get the mild retest. On the 30-day on the liquidation map, we have 85, and you can see how little liquidity there is in the 30 days because we haven't been in here in the past 30 days. And let's do a little bit of surgery of the price. We got tons of positions in here. This red comes in when the people are taking too many shorts, and I haven't seen it in quite a while. We're also entering in the grid. So if you haven't done the routine, which is to drink 3 coffees, find a mirror, slap yourself 3 times. Grid and extreme grid are areas where we are looking to close our swing trades, at least the long ones, of course. We can see that there is a spike of ask in this area. Let's see if that is going to actually manage to stop the price in there. And we have a whopping 1.13 million in delta, putting at the longs at larger risk in here of getting liquidated. So that's another alpha for a big pullback. Not a big, as I say. We also have in the order book at 95, 60 million in resistance, and that declines as we go into 98. That has happened before, but they pull back from 92 before the price arrived there. They flip it into actual support, as you can see in this area in here. And another alpha in here to be looking for shorts, or at the very least not to enter in a long, is the net longs shorts delta that once again, just like I left it when I went for holidays, that was around 15th of April, we started looking for shorts in this area. We took very mild profits. We only closed at around 84K when this retraced all the way in here, but that was the perfect timing. On the 20th of April, possibly I sent my article to patrons, and then immediately after that, instead of continuing down, it started shooting back up into the resistance again. And here we are with the net longs and shorts at 22,000. This channel continues to expand with higher highs, and we're going to monitor it every time we get to these stops. We're going to be prepared. Look at 2024, how the channel started expanding to the upside, eventually breaking out into over 109K. In that area of distribution, the channel starts being to the downside. So we are gonna be prepared. If we see a breakout somewhere in here, we should be looking into a channel that goes down. And again, we swing trade that. In terms of support, they have removed some levels, so the 74 is gone. They still left the 68, and we have this new level at 81, a support that is in confluence with some of the liquidation levels that we were spotting at 82. There is some support as well at 92 as well in here. Sorry, this is 81, the longer one. That 91.5 is the one holding the price, and very close to the price at the moment. They're defending at 93,400. But if that doesn't manage to put a new high on a daily basis and closing there, creating that scenario of the liquidity hunt, then we're gonna have to see what holds this, hopefully not reverting all the move down. In terms of fair value gaps, let's see what's the structure of the market below the price. We got one fair value gap, very fat and nasty, that goes all the way to 88.5, followed by a few more. They end around 84. After that, we have a skinny at 82.8, followed by 79.9 and 78.4. To the upside, we get 95, 97, 100, and 104. And that's why I think that a mild retracement, taking all of this 88.5 or partially maybe half of that, still helps to confirm that we are within a change of structure, a bullish one, of course. Guys, I'm currently hosting a position airdrop on Bybit. Get $500 to trade any of these coins by using the top link in the description. All you have to do is open the link and click register to claim. Guys, thanks so much for watching. Remember, if you haven't clicked the like or wrote any comments, I would really appreciate if you can do that. I'm very glad to be back. Let me know in the comments if you want me to cover any altcoin. I'll see you on the next one. Bye bye.